I asked you guys which stock I should analyze, and you have chosen CVS Health Stock, ticker symbol CVS. This stock is down 23% year to date, underperforming the overall market big time. On the 2nd of August, CVS presented quarter results where they beat on EPS and revenue. For the upcoming earnings, analysts think they will miss. People love CVS stock because of multiple reasons, one of them being the dividend, and I understand why with dividend yield at 3.4%. So could this be the perfect moment to buy CVS stock? Well, I'm very excited to see what you guys think about this stock, so please let me know your thoughts in the comments. My name is Thomas and this is Thomas Invest. I'm an investor looking for great stocks at great prices. So what does CVS do? CVS sells prescription drugs and a wide assortment of general merchandise, including over-the-counter drugs, beauty products and cosmetics, film and photo finishing services, seasonal merchandise, greeting cards and convenience foods, through their CVS pharmacy and Long's drugs retail stores, and online through CVS.com. If we dive in the most recent earnings report, we see that revenue was reported at 88.9 billion, up 10% year over year. Operating income was reported at 3.2 billion, down a significant amount versus last year. It's the same with the EPS. The main reason why this number is down is because of the restructuring program. The company recorded a 496 million pre-tax restructuring charge. The restructuring charge is reflected in the corporate other segment. The restructuring program is expected to be substantially complete by the end of 2023. CVS raised their full year guidance on EPS from a range of 6.53 to 6.75 to a new range of 6.9 to 7.12. To me, this looks really good, and so does the cash flow from operations. If we check the revenue breakdown, we see that healthcare benefits reported a revenue of 26.7 billion, up 17.6% year over year. To me, this looks really good. Again, operating income is impacted by the restructuring plan. The interesting thing is that they actually lower the operating income per share for the full year guidance here. If we check the second segment, health services, we see that revenue was up 7.6%, also a decent amount. Operating income reported an increase, which is also very interesting. CVS also increased the full year guidance top bottom line for this segment. The third segment, pharmacy and consumer wellness, reported a 28.8 billion revenue, up 7.6% year over year. Operating margin is down big time. They also lowered the operating income 2023 full year guidance. And now that we know more about the company, it's time to check the fundamentals of this stock. But first, if you made it this far into the video, I want to thank you a lot for watching this video. Make sure to subscribe to my channel to receive multiple analyses every week. And also join my Discord channel for free to meet other people within the community and to talk about stocks. It's completely free, so don't miss it out. Let's continue by diving into the fundamentals. CVS is a 91 billion market cap company. PE ratio is at 31, which could indicate that they are overvalued right now. Later in this video I will show you my 3 price targets for CVS stock, so make sure to watch until the end, because PE ratio is only telling a small part of the full story here. Revenue is at 339 billion, and in this graph we see that revenue went up in the long run. To me, this looks pretty steady. Over a longer period of time, margins are going down, which is something that I don't really like. This is definitely something to keep your eye on, especially since most recently there was a big decrease as well. EPS is following the same pattern as the margins. This is also something to keep your eye on. Analysts expect flat numbers for 2023 and 2024, but after that they expect double-digit growth in EPS. For the revenue it is a pretty similar, but with slightly lower numbers. It is expected to see mid-single digit growth in the coming years. Return on assets is sitting at 5.7%, which is a low number. Return on equity looks also low at 4.1%. And the most important number, return on invested capital, is sitting at 6.6%, which is also a low number, but it's slightly higher versus the 5-year average, which is nice. Current ratio is at 0.86, which is looking pretty good. It is decreasing over a longer period of time, which is also very nice. Right now, CVS has 82 billion in debt. I prefer companies that can pay down at least a big chunk of the total debt with the total cash. CVS has 16 billion in total cash, so they can't pay down a big chunk of their total debt. This is something that I don't like. So it's very important that free cash flow is growing, since this is used to pay down debt of course, but also to buy back shares, pay dividends and a lot of things. And here we see that free cash flow is going up in the long run. To me this looks pretty good. Shares outstanding are decreasing, which is a good thing. The increase that we see here is related to acquisitions. When shares outstanding are decreasing, it increases your ownership in the company, increases the EPS, lowers the PE ratio and makes it easier to maintain and increase the dividends. And since we're talking about dividends anyways, dividend yield is sitting at 3.4%, which is a decent number. Annual payout is at $2.42 and payout ratio is at 27%. I prefer 50% or lower, so right now they have 73% left in cash to buy back shares, pay down debt, do acquisitions and a lot of things. The 5-year growth rate is at 3.4%, which is a great number. And they increased the dividends for 1 year, which is kinda nice. And if you take a look at these numbers, the dividends paid since 2012, you see that CVS did increase the dividends at a decent rate. However, ever since 2018, they didn't increase the dividends anymore. Up until 2022, then they started to increase the dividends again. Payout ratio is a very important metric with dividends. It tells you if the dividends are safe. In here we see that over a longer period of time, payout ratio is kinda steady. In this graph we see the expected dividends in 2023, 2024 and 2025. Of course this is an estimation and can be highly impacted by results, but it gives you a rough indication. It's expected to grow at similar growth numbers, which is very nice. Overall these dividends look pretty good to me, but how about the historical returns? I decided to compare CVS stock with the overall market, in this case the S&P 500. Next to that I added two competitors, Cigna and WBA. On the 5-year chart we see that CVS underperformed the S&P 500 big time. In total, CVS returned 3% including dividends versus the S&P 500 sitting at 67%. CI was the only one being kinda close to the S&P 500 and Walgreens was off big time. On the 1-year chart it looks pretty similar with the S&P 500 returning 16% including dividends versus CVS returning minus 28% including dividends. On the 6-month chart it is a pretty similar story, with the S&P 500 beating CVS again. On the 1-month chart it is finally CVS beating the S&P 500 and the others in this list. So bottom line, CVS stock was beaten by the S&P 500 in the long run, and in the short run it started to create some momentum. So could this be the perfect time to buy CVS stock? Well, let's check the 3 price target that I created using the Everything Money software, which is one of the best tools out there. I'm using a low, mid and high assumption to get the 3 price targets, starting off with the revenue growth. For the revenue growth I'm filling in 4, 5 and 6% based on historical performance, their own outlook, but also because of the analysis. For the profit margin I'm filling in 1.5, 2 and 2.5. And for the free cash flow margin I'm putting in 4, 4.5 and 5. For the PE ratio I'm putting in 17, 18 and 19. For the free cash flow I'm putting in 8, 9 and 10. My desired annual return is 15% since I can get an easy 10% average annual return with owning an ETF. Usually I put in 12.5%, but I want a higher margin of safety with this company. Right now CVS stock is at $71. I hit analyze and we see a lot of green numbers. We have a low price target of $48 to $90. We have a mid price target of $71 to $112 and we have a high price target of $98 to $139. To me the mid price target is the most justified here, indicating that this stock is undervalued according to these numbers. And to be honest, because of the free cash flow and profit margin not aligning, the price targets have a wider range. I would close this gap to a range of $80 to $100. My final conclusion on this stock is that I do think this stock is undervalued. Most fundamentals look pretty good, but I'm a little bit concerned by the profit margins and the total debt. This whole price target is based on increasing margins, which easily could happen since this is their historical averages. From a dividend point of view, things look pretty interesting as well. Dividend yield is at 3.4%, which is a great number. The only thing that I don't like is the lack of dividend growth. For now, I'm adding CVS stock to my watchlist and wait for a bigger drop in stock price. And of course, wait for the next earnings report. And remember to always do your own research and never fully trust on what I or other YouTubers say about a stock. I'm not a financial advisor and this content is just for entertaining purposes only. I hope you liked this video and I did bring some insights of the company to you. I would really appreciate a thumbs up and make sure to subscribe to get notified when I'm posting a new video. Thanks for watching and I will see you in my next video.